Hey everyone, hope you're having a great day, and welcome back to Whiteboard Invest Crypto News. Let's dive straight into today's top stories shaping the cryptocurrency landscape. First up, we have the latest Bitcoin price update, with BTC currently trading at $61,000 following recent market movements. Next, despite ongoing trade feuds, a survey shows Chinese firms remain committed to the U.S. market, signaling resilience amid geopolitical tensions. And U.S. spot Bitcoin ETFs have recorded $31 million in net inflows after a streak of outflows, indicating renewed investor interest in cryptocurrency ETFs. Meanwhile, Ripple CEO expresses strong opinions, suggesting SEC Chair Gary Gensler's actions could impact the upcoming U.S. election. In other news, Gensler remains tight-lipped about the launch timing of spot Ethereum ETFs, but assures that the regulatory process is progressing smoothly. Additionally, there's speculation that former President Trump may participate in the Bitcoin 2024 conference, potentially shaping the cryptocurrency landscape. Lastly, a lawyer warns that UAE regulations might lead to a ban on crypto payments, highlighting potential regulatory challenges in the region. All right, dive in the details right now. Today, Bitcoin is trading at $61,400, showing a slight recovery compared to the range of $61,000 $61,100 observed yesterday. This modest uptick suggests some stability after recent fluctuations. As we look ahead, it's crucial to monitor whether this upward momentum can be sustained. Market sentiment remains cautious amid global economic uncertainties and regulatory developments. Investors are likely to watch key technical levels around $60,000 closely. If Bitcoin manages to hold above this support and continues to build momentum, we could see a potential retest of recent highs. However, a failure to maintain these levels could lead to further downside pressure, potentially testing the $60,000 support zone again. Overall, the near-term outlook for Bitcoin hinges on broader market sentiment and regulatory developments, which could dictate its next major move. All right, let's talk about the recent survey on Chinese enterprises in the U.S. Around 90% of these companies plan to maintain or increase their investments, even though over 60% report a tougher business environment due to U.S.-China trade tensions. This shows strong optimism and resilience. Why does this matter for us in crypto? Well, traditional markets and crypto often react similarly to market sentiment. When big players stay optimistic despite challenges, it can signal broader market confidence, affecting crypto positively. These companies face major hurdles like complex U.S. regulations and anti-China sentiment, similar to the regulatory uncertainty we see in crypto. Yet, their commitment to the U.S. market highlights the importance of a long-term perspective, even in tough times. Hu Wei from the China General Chamber of Commerce calls for better coordination to ease trade tensions. In crypto, collaboration and clear communication can help navigate regulatory issues and foster growth. In short, Chinese companies are betting on long-term gains despite short-term challenges. For us in crypto, it's a reminder to stay resilient, be prepared for volatility, and keep focused on the bigger picture. So, spot Bitcoin ETFs have bounced back with $31 million in net inflows on Tuesday after 7 consecutive days of outflows. Leading the pack was Fidelity's FBTC with $49 million, followed by Bitwise's BITB with $15 million, and VanEck's HODL with $4 million. On the flip side, Grayscale's GBTC saw $30.3 million in outflows, and ARK Invest's RKB reported $6 million in outflows. Interestingly, BlackRock's IBIT had zero flows despite a massive daily trade volume of $1.1 billion. This return to net inflows signals renewed investor confidence, which is a positive sign for the market. When big players start pulling in more money, it often indicates a bullish sentiment. Now, the really exciting part is the upcoming spot Ether ETFs. After getting soft approval from the SEC, firms are gearing up to launch these soon. Bitwise CIO Matt Hougan predicts these Ether ETFs could attract $15 billion in net inflows within the first 18 months. What does this mean for us? If you're into Ethereum, this could be huge. More investment means more stability and potential growth. Keep an eye on these developments. They could significantly impact the crypto landscape.
If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day.
Let's dive into some provocative statements from Ripple CEO Brad Garlinghouse and billionaire Mark Cuban about SEC Chair Gary Gensler's impact on crypto and politics. Garlinghouse's assertion that Gensler could cost President Biden the election raises eyebrows. It underscores the high stakes in crypto regulation, where decisions can sway public opinion and potentially influence electoral outcomes. The legal battle between Ripple and the SEC adds another layer. It's not just about regulations. It's about how these regulations are perceived by voters and investors alike. The recent court rulings on XRP highlight the complexities and uncertainties facing the industry. Mark Cuban, chiming in, adds weight to the debate. His criticism of Gensler's approach resonates with many in the crypto community who see regulation as a double-edged sword, necessary for legitimacy but potentially stifling for innovation. On the political front, contrasting views between Trump's support for crypto and Biden's evolving stance underscore how crypto regulation has become a political flashpoint. With the 2024 election looming, how crypto is regulated could indeed become a decisive factor for voters, especially younger and independent ones. As investors, we need to watch these developments closely. Regulatory clarity is crucial for the long-term health of the crypto market. How Gensler navigates these waters will not only impact companies like Ripple, but also shape the broader investment landscape in digital assets. Gensler's comments at the Bloomberg Invest Summit indicate that the launch of spot Ethereum ETFs is progressing smoothly. This is a positive signal for the crypto market, as it shows regulatory progress towards offering more mainstream investment avenues for Ethereum. The approval of 19B4 forms for 8 Ethereum ETFs last month is a crucial step. Now firms are focusing on finalizing their registration statements, which include details like seed investments and fees. Gensler emphasized the importance of full disclosure, which is standard practice for the SEC in ensuring transparency and investor protection. However, Gensler's remarks also reflect ongoing concerns about crypto compliance. He reiterated that many cryptocurrencies may be securities under U.S. law and criticized platforms for insufficient disclosure to investors. This regulatory scrutiny underscores the need for clarity and compliance as the market evolves. On the political front, the intersection of crypto regulation and the upcoming election is noteworthy, with Donald Trump vocalizing support for crypto and Biden's administration seeking input from the industry. Crypto policies could indeed become a factor influencing voter sentiment in 2024. The progress towards Ethereum ETFs signals growing institutional interest and regulatory maturity in the crypto space. Keep an eye on how these ETFs launch and their impact on market dynamics. News that former President Donald Trump is considering attending Bitcoin 2024, the largest annual Bitcoin conference in the U.S., is significant. It signals a growing intersection between cryptocurrency and mainstream politics. Trump's potential presence, along with other notable figures like Robert F. Kennedy Jr. and Vivek Ramaswamy, underscores the increasing influence of crypto in shaping political narratives and policies. Trump's campaign strategy around crypto is clear. He's embracing it. From engaging with NFTs to accepting campaign donations in crypto, he's positioning himself as a champion for the industry. His advisors' remarks about Biden's administration stifling innovation with regulatory controls contrast sharply with Trump's promise to foster U.S. leadership in crypto and technology. This political backdrop is crucial for investors to watch. Regulatory decisions, like the recent quick approvals of Ethereum ETF proposals, may reflect broader political pressures and stances. The upcoming presidential debate between Biden and Trump promises to highlight their divergent views on crypto, potentially influencing voter sentiment and market dynamics. As we move forward, these developments emphasize the importance of staying informed about both crypto markets and political landscapes. They could significantly impact investment strategies and market trends. So, keep an eye on how these political moves shape the future of crypto regulation and adoption. So, here's the scoop on the recent crypto regulations coming out of the UAE. According to Irina Heaver, a prominent UAE lawyer specializing in crypto, there's some serious concern brewing. The Central Bank of the UAE is rolling out new rules that could effectively ban crypto payments unless they're backed by UAE dirhams or registered foreign tokens. This move, as Heaver points out, seems at odds with the UAE's usual open-for-business stance, which has historically attracted a lot of foreign investment. Now, why does this matter? Well, for one, it could stifle innovation in the crypto space within the UAE. Cryptocurrencies and stablecoins like Tether, USDT, have been crucial for transactions in sectors like Web3, which encompasses decentralized finance and NFTs. By restricting these transactions, the UAE risks falling behind in the global race for tech and fintech dominance. Heaver also highlights a crucial point about advocacy. Unlike places like Switzerland, where industry associations like the Crypto Valley Association actively influence regulatory decisions, the UAE lacks a unified voice for its crypto sector. This could leave the industry vulnerable to regulations that might not fully grasp its potential or could inadvertently stifle growth. Overall, these developments underscore the importance of thoughtful regulation that balances innovation with investor protection. For the UAE to truly thrive in the digital economy, it might need to reconsider how it approaches crypto regulation to ensure it remains an attractive destination for tech entrepreneurs and investors alike.
All right, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.